Good day. Welcome back to Invest Money PH YouTube channel. In this video, we will discuss how to set up your stop loss, buy on breakouts, and sell on target price, using AAA equities. This feature is one of the main reasons why I decided to move from COL Financial to AAA Equities, aside of course from the fact that AAA Equities has a much better mobile app for on-the-go trading. But first, don't forget to hit that subscribe button and notification bell. See you in a bit. Okay, so as I've mentioned, AAA Equities has a trigger-based ordering function, or what they also call as conditional orders. We can use this function to send orders to the market at predetermined prices. This is useful when we want to send orders for selling at our stop loss, or buy on breakout, or sell when our target price is hit. This feature is not yet common in the online stockbrokers in the Philippines. As of this video, there are just less than 3 brokers with this feature, and the one with the lowest minimum capital to open an account is AAA Equities. This is not a paid advertisement, by the way. This is helpful to those who don't have the time to monitor prices real time, either those part-time traders busy with day jobs, or even full-time traders playing with very volatile stocks. The feature also helps build discipline to obey one's stop losses, as it becomes mechanical, rather than hesitating during market hours, whether to enter that stop loss order or not. This feature is beneficial to those who did their homework on buying a certain stock on breakout, but don't have the time to check regularly if prices indeed are approaching the breakout point, whether immediately or a few days after. Let's dive in. First, log into your AAA Equities account. It's at www.trade.aaa-equities.com.ph. So here is my account. Click Trade on the left panel to enter your buy and sell orders. The Trade section is at the lower left corner. There is a toggle button to whether buy or sell. Buy is green color, sell is red color, so make sure you're on the correct side of the transaction. For usual orders, you will only need the General tab. For conditional orders such as stop loss, buy on breakout or sell on TP, we will use both General tab and Conditional order tab. Let's look at a sample chart using Investograms. Let's use Converge as an example. So in another video, I showed how to use risk-reward ratio or RRR in improving your trades. Let's plot a similar one for Converge here. Say the target price is around the resistance of 19.20. And stop loss is 18.25, which gives us a favorable RRR of 2.92. So we take note of our stop loss of 18.25. Let's set up the stop loss. In AAA Equities, encode the stock code. Since this is a stop loss, toggle to sell. Go to the Conditional Orders tab. In Field, choose Last Price. In Condition, choose less than or equal to. Then at Price, encode stop loss, for this example 18.25. Note that this price is the trigger price to send the order, not the actual selling price. Then Condition Expiry Date, set the date you want. As for me, I keep it at 1 month or longer, so it doesn't expire immediately. Double check your entries. Then go to General tab. Input the shares you wish to sell, and the selling price. For this example, let's put 3,000 shares, sell at 18. Click Sell, then your order will be queued in the Order List tab on the lower right window. As you can see here, I have pending stop loss orders for ICT and CNPF. They are marked as pending trigger, because they are not yet queued orders. They are just waiting for the trigger, then queued. So what happened here? We set a conditional or trigger-based order. What will happen is that if the price of Converge goes lower than or equal to 18.25, then an automatic order will be sent and queued, for 3,000 shares at 18 each. Again, note that the 18.25 is the trigger price, and 18 is the selling price. Now, it depends on the time the order is sent whether there are buyers or sellers at these price ranges, and if there is a match, your order will be hit. If you want to sell at a specific price, encode such price and as close as possible to your trigger price. But in case there is a gap down in price, and your selling price is higher than the gap down price, there is a chance that your order will not be filled immediately as there are other sellers selling at lower prices. If you want to get out as soon as possible, no matter what the price, example, panic selling, set the selling price way lower than trigger price. For example, set at floor price. If there are buyers higher than your selling price, which is at floor already, and there are no more sellers selling low, then your order will be matched, either at floor price, or highest available buy price. You can also use this setup in putting trailing stops, but as of this video, you need to set up trailing stops manually by adjusting the trigger price and selling price upwards. The system is not yet as sophisticated like an eToro, where trail stops automatically adjust as prices go higher. Now let's look at buying on Breakout. Going back to Converge, there is a resistance at around 19.19. So if the trade plan is to buy if Converge is able to breach the resistance and go higher than 19.19, then we set it up like this. Toggle buy. In Conditional Order tab, set condition as greater than or equal. Set trigger price and expiry date, for example 19.19 and expire by June 30th. In General tab, encode number of shares to buy, and buy price. Click buy. Again, this will be queued in your order list until trigger price is reached. So in this example, AAA Equities will send an order as soon as prices go higher or equal to 19.19. Such order is to buy 3,000 shares at 19.22 per share. Again, similar to the stop loss concept, the higher you set this price from the trigger price, the faster it can be filled. But if you set it close to trigger price, then your order will be queued like the rest. If there is a gap up of price above 19.22, then you're technically bidding lower than market price, so your order will be queued, in case prices go back down to 19.22. Selling on target price or TP. Toggle sell. Condition is greater than or equal, then encode trigger price and in General tab, the price you actually want to sell at. Let's try clicking this. So here it says, the order will be sent if last price is greater than or equal to 19.19. And when it does, it will order a sell of 1,500 shares at 19.22 each or higher. Another example, Philex mining. Say the assumption is there is support around here in this blue line, and you intend to trade this at your own risk. To set up stop loss, toggle sell, last price less than or equal to, cut loss price in this example is 6.25. You can make the trigger and selling price the same. But if you want to get out quick, then set it much lower than trigger, in this example 6.10. The market will sell your shares at 6.10 or higher, assuming there are available buyers and no other sellers better than 6. If you're waiting to buy at Breakout, in this example above resistance of 7, then toggle buy. Conditional Order tab, condition is greater than or equal to, trigger price is 7. Actual buying price in the General tab, is 7 also, or you can set it slightly higher if you want your order to be filled quick, say 7.04, then click buy. There you go. Just be careful when you set your trigger prices, expiry date, and actual order prices. Also make sure there are parameters set in the Conditional Order tab, otherwise it will be a real-time order, and you end up buying or selling unintentionally at wrong prices. You can set order price equals trigger price if you're willing to get in line for your order to be matched. If you're in a hurry, example panic buying or selling, set it farther from trigger price and offer a better selling or buying price. The market will always give you a better or equal price. That is, if you sell low, the market may either match your low selling price, or slightly higher, if there are buyers at higher prices, and no sellers aside from you. If you buy high, then the market may match that buy order at high price, or match your order for a lower price. Again, if there are no other buyers aside from you and there are many sellers at lower ask. Bottom line is, you must mean the order price you encode, as it can be matched. You might ask, how different is this from good till cancelled or GTC orders, available in most online brokers? GTC orders are queued real time, and it may be matched anytime. It is closed as soon as matched, or when you cancel it, meaning it does not get cancelled by end of trading day, unlike normal orders. GTC order is different, since if you sell low, that low price is ordered right away, and it may get hit immediately, even if the price is uptrend. You end up selling at the low market price, like an outlier. On the opposite, if you buy high, then such bid is the best offer and it will get hit immediately, even if there is no breakout yet. In this sense, conditional order is better, since the order is not yet sent, as trigger parameters are not yet met. This, for me, is the better strategy. The only time GTC can be useful, is if you sell high, and then forget about it. As long as there are sellers selling for lower prices, your GTC order will just stay there until you're the lowest seller. Likewise, you can use GTC if you bid to buy at a very low price, as it will only be hit if the prices actually go down to your bid price, but by this time, the stock might be in a downtrend already. Hope you learned something. Subscribe to our YouTube channel. See you next time.